I think the bar was set unreasonably high for Apple, believe it or not. I mean, since 2007, it's been nothing but growth. And today, I think the report was more about the qualitative measures. It is clear that revenues have dropped, but consensus was expecting that type of drop. But it was more the guidance that we heard afterwards that gave a little bit of comfort to shareholders. iPhone sales dropped off, but not as much as consensus expected in a worst-case scenario. One thing of concern is actually the Chinese market. I think, at least from America, many investors felt like Apple would be able to penetrate that market a lot better and a lot easier than it has, and clearly that's not the case. If the stock does tend to drop off overnight, if we see it drop off tomorrow, it just might be some spillover from people like, netting through all the numbers. But I think long-term, it's still a very strong buy on a long-term basis.
Okay, yeah, it certainly looks like the market may have taken that well. We'll be watching, obviously, tomorrow, but I'm looking, it's up now about 5% in after-hours trading. So, obviously, it will be a big focus tomorrow. I wanted to get your thoughts more broadly on the session today, because it certainly has been a busy day of news, Larry. Mostly micro in focus, though, with this whole raft of earnings that have come out. Were there any other major sort of overarching themes or trends at play today?
Well, earnings season, we're at the apex of it right now, and it seems like people, in aggregate, earnings have beat 82% of the time by like 6%. We have revenues beating 60% of the time by about 1%. But I think investors are looking beneath that, looking at the qualitative measures, the guidance given, and actually surprising on the upside with that. Most people thought with Brexit that the guidance wouldn't be as good as it has been. So it's given people a lot of comfort in that $130 earnings per share number assigned to the S&P 500. Still a pretty heavy multiple of 17 times, but on a relative basis, people are looking for yield, and it seems like it's not that bad of a bet on a relative basis.
All right, I wanted to get your thoughts on those oil prices, because we have seen oil continuing to track lower. It's minting now those fresh 3-month lows, I guess, over supply concerns. They're really continuing. The strength of the dollar certainly impacting those oil prices as well. It hasn't seen, a new high in nearly 1.5 months. So what are some of the factors that appear to be causing prices to soften?
Yeah, I think the big factor is that oil overshot on the upside, just like it overshot on the downside back in January. It never deserved to be as low as it was, never deserved to be as high as it was a month and a half ago. But that said, like the short term, we're looking at Iran. Iran got back on production, like online, much quicker than people expected. We look at Russia and OPEC, the communication breakdown. That's not working out really well. Also seeing in the United States a glut with product, not with oil per se, but with product. And I think a lot of that is because when there was a glut of oil, people saw the margins in gasoline, kerosene, jet fuel, et cetera, and built up a lot of that. Demand growth has been nothing to write home about, but it hasn't been tragically bad either. So I think it's one of those things that, like I said, all year long, I think oil at the end of the year will see a balanced market. However, $50 might be the upside for oil, and I've been saying that all along.
Okay. Obviously, a very, very big week ahead of us. Now, we are watching these sort of technical levels on markets. The S&P 2169, it is off last week's high of about 2175. Now, we have obviously big week of earnings. We've got the FOMC meeting, which has kicked off today, the Bank of Japan. We've got Eurozone stress tests, just to name a few. So a big week of events. How likely is it that these events will be potentially disruptive for markets and we'll see sort of a near-term sell-off?
I think there's a lot of potential for the markets to be disrupted. It's an enormous amount of events that you just spoke of. And the fact of the matter is the S&P 500 has held up very, very well. And you're right, technicians are looking at that 2169 to 2183. And if the market can stay in that range, maybe that's just a new floor for the market. I continue to be underweight the U.S. market, but not because of the macro events per se, because that will affect everything. I just think that on a relative risk-reward basis, there's more value elsewhere, especially in the emerging markets. But boy, when you consider the S&P holding up with all these disruptions right in front of us, the FOMC, Bank of Japan, GDP coming out on Friday as well, it's amazing that the market has held up as well as it has.
Absolutely. Well, let's just talk the Fed for a moment, because obviously kicking off their two-day policy meeting there today, we know that there's going to be no dot plots, no press conference. You refer to this, I'm just having a look, as somewhat of a normal meeting, I guess. So what are you expecting to see? Are they going to give any clues as to the timing of the next hike?
Yeah, I don't know if I'm expecting this or hoping this, but it seems to me I just keep remembering the meeting back in October when the balanced verbiage came out, where the risks to the economy, the risks to the growth seem to be balanced right now. And it seems like that would be warranted. No rate increase talk tomorrow, obviously, but I do believe that Jackson Hole, we will hear hints about September, because I firmly believe that will happen. But I'm thinking that we're going to have a rerun of last October, a pretty boring event altogether.